Welcome back to Explain the Charts, your go-to channel for in-depth market insights. Today, August 16th, 2025, we're tackling one of the hottest assets in the crypto space, Ethereum or ETHUSD. The market is buzzing with activity, and recent news paints a fascinating picture for Ether. Coinbase developers have just enabled AI agents to autonomously execute Ethereum payments, a monumental step for decentralized finance and broader adoption. Adding to the excitement, reports indicate significant whale accumulation, signaling strong institutional confidence and a bullish outlook. Yahoo Finance even dubbed Ethereum the biggest macro trade of the next decade, as it surges towards near-record highs. However, it's not all sunshine and rainbows. A-Invest reported that Ethereum's unstaking queue has surged to a staggering $3.8 billion, with nearly 35.3 million ETH awaiting withdrawal. This massive influx of potentially liquidable supply could exert considerable selling pressure, especially if holders decide to take profits. Just yesterday, on August 15th, Ethereum briefly dipped below $4,400 amid heightened volatility, showing immediate market sensitivity. CoinDesk also highlighted a more cautionary note, reporting that hackers are taking advantage of Ether's rally to liquidate stolen funds, adding another layer of sell pressure to watch out for. These current events provide essential context, and we'll now examine how these narratives translate onto our charts. Let's zoom out to the one-day chart to grasp the broader market trend for ETHUSD. Looking back over the past year, Ethereum experienced a significant bullish impulse in May of 2024, seeing an impressive 19.2% jump on May 20th alone, rising from roughly $3,071 to $3,661. This marked a key reversal from earlier consolidation and established a new higher base. Following a choppy mid-2024, another strong upward trend began in November 2024, pushing prices towards the $4,000 psychological resistance level by early December. After retesting this resistance multiple times and experiencing a significant dip in February and March 2025, where it touched lows near $1,410, the market showed resilience. This deep correction was likely exacerbated by broad crypto market jitters and potentially some of that early hacker selling activity we heard about. However, buyers stepped in aggressively, especially evident with the massive volume spike on February 3, 2025, when the price dipped to an extreme low of $2,100 before rapidly recovering. This powerful bounce from critical support demonstrated strong underlying demand. Since May 2025, ETH has entered a robust uptrend, consistently forming higher highs and higher lows. This rally perfectly aligns with the biggest macro trade sentiment mentioned in the news, indicating growing investor confidence in Ethereum's long-term potential despite its known scalability challenges and high fees. Now, let's narrow our focus to the more recent price action on the one-day chart, specifically from the beginning of August 2025. We can see a remarkable surge, with ETHUSD climbing from around $3,486 on August 1st, all the way to a fresh multi-year high of $4,770 on August 13th. This sharp ascent confirms the strong bullish sentiment and whale accumulation reported in the news. The candles show consistent green bodies, indicating strong buying pressure day after day. However, the candle for August 14, 2025, is a large red candle, opening at $4,732 and closing significantly lower at $4,551, with a high of $4,783. This immediate pullback from the high hints at profit-taking as the price approached its all-time high. The very next day, August 15th, saw the price open at $4,549, hit a high of $4,672, but then closed lower at $4,439, even dipping to a low of $4,368. This sharp drop confirms the news about Ethereum dipping below $4,400 and suggests that profit-taking pressure, possibly from those liquidating funds, is very much at play. The $4,368 level on August 15th acts as immediate short-term support, being the recent low during this current pullback. Looking back, the $4,000 psychological level, which was a significant resistance zone in late 2024, has now clearly flipped into a major support level following its decisive breakout in early August. Switching to the 1-hour chart, we gain a granular view of this recent volatility. Observe the steep climb leading up to August 13th, followed by the rapid descent. The hourly candles on August 14th show a clear break downwards from the $4,700 level, accelerating the drop. This short-term reversal is a prime example of how quickly sentiment can shift in a highly liquid and news-driven asset like Ethereum. The immediate resistance overhead is now the $4,770 recent high set on August 13th. Below current prices, the $4,368 level from August 15th's daily low is critical short-term support. If this level breaks, we could see a retest of the $4,200 zone, which held strong earlier in August. This $4,200 level also served as minor resistance before the most recent leg up. The spike in trading volume during these sharp moves, both up and down, highlights the intense market participation and liquidity at these price points. Now, let's drill down even further to the 15-minute chart to capture the intraday swings. Here, the August 12th rally, where price surged from the 4,200s past 4,600, looks incredibly impulsive. Notice the succession of strong green candles, indicating aggressive buying, likely fueled by positive sentiment and whale accumulation. However, the sharp decline on August 14th is starkly visible with large red candles and increased selling volume. This confirms the market's quick reaction to potentially negative news or profit-taking pressure. For day traders, these microtrends are crucial. Reversals often begin with exhaustion patterns, like small body candles at peaks or rejection wicks. On August 14th, after the initial drops, there were brief rallies that failed to reclaim higher levels, indicating weakness. Understanding these shorter timeframes helps identify opportune moments for short-term trades, either riding momentum or fading exhausted moves near intraday support or resistance. The current price is hovering around $4,439, showing some stabilization after yesterday's dip below $4,400. So, what does this all mean for short and long-term trading strategies? For short-term traders, Ethereum remains highly volatile, offering frequent opportunities for quick gains or losses. The key price levels of $4,368 and $4,200 act as immediate support zones. A rebound off these levels could signal a continuation of the short-term uptrend, potentially targeting $4,600 and then the $4,770 peak. On the flip side, a decisive break below $4,368 or $4,200 could lead to a deeper retracement towards the major $4,000 support level, possibly indicating further hacker selling or unstaking pressure. For long-term investors, the narrative remains largely bullish, supported by fundamental developments like AI integration, ongoing network upgrades, and the growing DeFi ecosystem. The dips, even sharp ones, could be viewed as accumulation opportunities, especially around established support zones like $4,000 or even $3,500 if a larger correction occurs. The concept of Ethereum being a macro trade suggests that significant institutional capital is still flowing in, which bodes well for its long-term trajectory. However, the large unstaking queue and the persistent issue of high transaction fees remain headwinds that could cap significant sustained breakouts until effectively addressed by future upgrades. Recapping the important price levels to watch for ETHUSD. On the upside, the immediate resistance is the recent high of $4,770, which, if broken, opens the path to its all-time high near $4,891 and potentially the $6,000 target mentioned by Cointelegraph. The likelihood of hitting new all-time highs is moderate to high, around 65%, reinforced if market momentum picks up and we see fresh capital inflows or positive news on future upgrades. For downside protection, immediate support is at $4,368, the low of yesterday's sharp dip. Below that, $4,200 represents another crucial pivot point, while the major psychological and structural support lies at $4,000. The likelihood of a retest to $4,200 is moderate, around 45%, especially if selling pressure from unstaking continues or if broader crypto market weakness emerges. A drop to $4,000 is less likely in the short term, perhaps 25%, but would be reinforced by a significant bearish catalyst like adverse regulatory news or a global market downturn. Things to look for include ongoing updates on Ethereum's EIPs and scalability solutions, as well as the actual impact of the large unstaking queue on market supply. Monitor global macroeconomic indicators and any further news regarding institutional adoption or significant whale movements. As always, manage your risk, stay informed, and remember, trading is about probabilities, not certainties. Thank you for watching Explain the Charts, and we'll see you in the next one.